Welcome, everyone. I'm the founder of Quidroom, the social platform where professional investors globally find each other. Before we kickstart, for all the investors who are listening in to the session and the podcast, if any of your questions are unanswered or to attend future investor meetups, you can join hundreds of other investors in my personal community in Quidroom. The invitation link is posted in here. So today we have Scott, an active investor in Southeast Asia, Paytech startup ecosystem. Hi, Scott.
Hi, how are you?
I'm good. Not bad at all. Interesting markets, though. But otherwise it's fine. Anyways, what I'm going to do is, Scott, usually whenever we do this podcast, we always love to start with an investor origin story. Sometimes it is accidental, sometimes it is completely calculated that you end up where you are. So from my end, what I've seen is that before you even ended up being in the Southeast Asia fintech sector, you were before this having a career in China. And in 2016 is when you made the move, right, to start closely looking into ventures here in the Southeast Asia region as well. So that means now it has been 6 years down the line and seems like you have found your true north. Why was this the true north?
Yeah, well, I guess there's a few things in my life really. I'm definitely a finance geek, so I think I have always been. So I started my career working with credit derivatives and that in New York City, and then the other side is the entrepreneurial side. So you're right. I was in China. Me and a partner started a business doing corporate finance work for mid-sized companies, and so at a certain point, for family reasons, I wanted to transition out of China. But those kind of intersections of finance and obviously tech and entrepreneurism culminated in me being one of the founding partners of 1982 Ventures. So, yeah.
Okay, all right, interesting. Now, anyways, we are mainly going to be talking about Paytech Investing today. So let's get right into it. So the basic question that investors who do not have exposure in payment tech right now is going to be, why should now be the right time that they should consider exposure into the sector in itself?
Yeah, it's a great time to be investing into payment technology. I think one of the sort of fallacies that we have, and I think all of us as investors, we come to everything with our own personal experiences and biases, and I think many investors, we tend to be, I would say, upper middle class, a bit more banked than other segments, and for us, payments are seamless. We may have had credit cards for a few decades now, and these sort of things. So the access has sort of been there, but in reality, actually, the payments ecosystem is really just getting started. And if you look at how long credit cards have been around for most folks, it's not that long. And the pace of innovation is growing. And so just to kind of give you an example, we can look at a mature market like the US, and we'll see that payments revenue, according to McKinsey, is going to double between 2020 and 2025. So that's revenue from payments companies is doubling. And if you look in developing markets, if you look in developed markets, it's changing just drastically. I mean, as much as we think payments are ubiquitous, in the US, we have people using checks. In this region, even B2B payments, there's a lot of cash that still exists. So you don't have to go back in time too far, even here in Singapore, which is a very digital country, a very digital payments country, when you had to have cash, when you couldn't pay, you couldn't use your card or your wallet or your QR code in a taxi or at your local store because it wasn't the preferred method. So it's changing a lot. It's changing very fast. But the thing to realize is that it's got a long way to go still. We're not done yet. Like a lot of areas of fintech, this isn't the end state that we're at today.
Absolutely. And I wanted us to cover specifically payment tech because sometimes a lot of people don't realize how broad payment tech can actually be, right? So even before we go into the Southeast Asia ecosystem, maybe from your end itself, if you can just cover exactly when you look into payment tech, what are the different sectors that you can, subsectors that you can look into, then that will be good.
Yeah, payments is, I think you really nailed it. Payments actually is quite a fragmented space today, and the way we use payments today, a lot of times it seems like you know, the same one or two ways we pay for everything, but a lot of times what's going on behind the scenes is highly fragmented. So there's so many aspects of payments. I guess we always say like payments is the logistics of money, and just as you can take a plane, you can take a boat, you can take a car, you can walk, you can take public transport. There's so many ways that money moves around, and so some of the different ways that you might be able to express a thesis or to come up with a thesis could be around actual payment methods. So whether he's saying I'm taking a view on cards or different payment methods like bank transfers, buy now pay later, crypto, you can take a view on different segments of the markets, because we know that consumer payments and B2B payments traditionally have been quite separate. In some segments, we're seeing them start to converge. There's a whole rack of tech behind all of this as well. So there's things that are like SaaS tools. There's risk management tools, and they're all used by different users. Whether it's and it a lot of times is attached to Rails. So whether it's account verification, if it's fraud prevention, if it's credit risk scoring, if you're talking about merchant verification. So there's a lot of different ways you can express a thesis into payments tech. And I think the deeper you go into it, the bigger the ecosystem seems to be.
No, that's thanks for bringing that up, because sometimes when we talk about payment tech and if investors are not that familiar with it, then they will only think about credit card and wire transfer wise is there, and so that's it. And so that's why it's very important that we understand how broad the whole industry is. Now that also brings me to the dynamics of the industry as well, right? Because as an investor, when you're looking into investing, and since you're highly concentrated of doing these investments into companies that are that support the Southeast Asia ecosystem, even investors who are actively investing into payment tech, they may still only have an understanding of how payment tech works based on startups that they have seen in Europe and US. It's unfortunate, right? So my question to you is the process pretty similar, the way in which you would analyze what you want to invest into, startups that you want to invest into when it comes to Southeast Asia, as like how investment is done in Western counterparts, or are there going to be certain factors that will that will act as a differentiator in the way in which you can assess Southeast Asian startups in the space?
Yeah, it's a pretty good question, because I guess we all invest again based on where we're coming from and what we've seen in the past, and we're always trying to adapt those lessons we've learned, maybe in other markets or in our personal experience. I think the really important thing to remember, or I guess, or for that's a bit more difficult, is this region, as much as it's one region, it's also very fragmented, and the stage of development of different markets it varies a lot, and the end state probably looks very different, and so it's not, at least we don't believe you can just kind of copy paste what's happened in Europe or what's happened in the US, and probably you would never want to do that again if you could avoid all the mistakes that are still kind of hanging in there, but you do want to draw some of those lessons for sure. And then also realize that actually this region takes the lead in some areas. So when you talk about real-time payments, actually Singapore has come really far in that. We're already looking at doing cross-border India has done really well with real-time payments. And so there's different ways. I think each of these markets is starting from a different place. And then you have this other sort of layer that there is a lot of transactions, that are cross-border just because of the nature of having, I would say a group of countries. And so that adds an extra kind of complexity, but also a bit more opportunity.
That actually brings me to the question, right? Because you mentioned markets are highly fragmented in Southeast Asia, which is highly true. Every single country has a different language, completely different culture, and you would have to deal with all of those when you are setting up the company. But that means usually from when markets are highly fragmented, then it usually tends to boil down to lesser opportunities of growth and higher cost of user acquisition. Are these challenges that the fintech startups in the payment sector have been facing right now in the region? Or do you feel that they still, even with these challenges, or even if these challenges do not exist, they will still be able to overcome it and come out as winners and sometimes even bigger players than the ones in Europe or US?
I think it's just there's a lot of unpacking that question. That we always see with challenges creates opportunities. So and that opportunity set is different in each of these markets or in each of these sort of segments. So some of the first unicorn, I guess if you think about like a Neum, they've been a company that's been able to kind of take some of this approach and take a more regional approach, kind of from a very early on perspective. Other payments plays, maybe domestic, a lot of these markets actually have a big enough domestic market, at least to build something pretty big and pretty strong before you need to already be thinking about jumping to the next market and jumping to the next market. And because, as you mentioned, you do need licenses for most of these things. If you're touching payments, there's a lot of risk in that to society. So regulators understand that and say, look, we're not going to just let anybody start playing with other people's money and sending it around. So it's usually, we see kind of two, aside from pure just tech plays that are servicing the payments industry, usually folks are either going to start a company that's in a very cross-border, and that's part of the thesis, and trying to figure out which of those two or three key markets they need to connect together before they expand out, or it's a much more domestic play that you start to build a portfolio and then you can expand into adjacent countries. But it's usually one of those two playbooks. Kind of doing everything all at once can be pretty capital intensive for a payments company. So it doesn't normally happen. That said, we have seen some players take a bit more aggressive approach. You see players like I don't know if we're supposed to name names in this, but you see players like Rapid who come into the region in a pretty strong way, and able to build a footprint across multiple geographies. You see the same thing with companies like Stripe taking that approach, though it didn't work for them the first time. I think there's a pretty public case, where Stripe had come into the region, didn't fully get it right, had to kind of take some licks and now make it another effort. So it does create a lot of challenges. I think when you're dealing with regulators and regulated businesses, you do need to have a sense of closeness to that market. So we've seen quite a few governments in this region say, hey, look, just having a big overseas payment network come in and dominate our market is not the best for us from a national securities perspective. We don't necessarily want to be beholden to that. We want to have our own security. We want to be our own, controlling our own destiny. And that's a good thing. There's a lot you can build on top of that.
Absolutely, and that more or less makes me feel that from at your end, it becomes a bit more complicated when it comes to doing the valuation of these companies, right? So because you had to look into multiple factors on how you can evaluate them. Now that brings me to we do need to talk about valuation, but before we get there, because we are still talking about the risk in here, so you already brought up the fact that the politics is very different in each country, right? Now I want to just take a little bit closer look around that. So in Southeast Asia, political changes result in drastic policy changes. So, and usually when it comes to investing into startups, when you invest into startups is because of the current policies that are in place. Now, you have seen exactly in the recent times, exactly what drastic policy changes can do to startups in China, as well as in India, especially in the crypto market space as well. You had seen recently what happened. So there are a lot of examples coming out right now where these kind of policy changes actually impact, especially payment tech startups as well, because they are, as you just mentioned, is they are highly regulated, and compliance plays a huge role in there, and it is highly dependent on the current political situation as well. So how do you account for the political and regulatory risk when in your portfolio when you invest into these type of paytech startups in Southeast Asia?
Yeah, I think it's important to, whenever you think about regulation, is think about what's the regulator's perspective. And this is something we spend a lot of time with. We talk to regulator quite a bit in each of these markets. And generally the regulator tends to be, in most cases and within a certain guidelines, they want to protect the individual. That's one of their core things. You know, the widows and orphans are usually a key consideration there. It's not to say that certain regulators haven't made bold moves. You know, we talk about India, that was a pretty bold move they made a few years ago. But in the end, they're trying to do a calculation of, will this be a net benefit in the long run? And are we taking pain there early? So whenever you make an investment, I think in a regulated space like that, you have to say, well, what are the likely outcomes, and who's going to be the beneficiary of that? You know, if it's to reduce the cost of payments, it's usually a good thing. If it's to reduce risk, if it's to make things faster, then it's usually better for consumers. Then you're going to find that typically the regulator will be on its side. I think as much as we can talk about that, this region of Southeast Asia actually politically, aside from I think Myanmar really was which was, you know, a pretty small isolated market to begin with. The region has proven to be pretty stable, despite some of the changes in leadership. Things have gone pretty smoothly, and the regulators are still very much focused on that, on helping people. And then I think the other interesting thing, especially if we look at a more, I would say that the most drastic case, which I think the jury's still out, which, you know, we talk about demonetization or kind of the introduction of real-time payments, of sort of destroying value. Actually, the value created on top of that is very interesting. So if you look at businesses like PhonePe, they couldn't have existed without a base underneath it, and it does benefit the individual people. So I think it's something that we hold dear, and I think anybody who's investing in regulated companies should be looking at is this going to be a net benefit, or is this something that it will sort of hurt? It'll end up costing consumers more. They're gonna not be protected. They're gonna be at risk of losing money. This is going to be a way to launder money. You know, those kind of things are generally, you're taking a lot of risk there, and you're going to be short-lived, probably.
Interesting. And now I want to just go a little bit more deeper around valuations in this market, right? So let's start with what is happening in the market right now. There's a lot of news coming out about a lot of payment tech companies, especially BNPLs, going through down rounds in the recent weeks. That is also because of exactly where the market is at this point of time, right? Now, what's your opinion of startups in Southeast Asia? Do you feel they, in the payment tech sector, do you feel that they have been overvalued during the last few years and a correction is going to happen?
Well, I think across the board, we're seeing multiples come down. And that's in traditional businesses, that's in technology-driven businesses. So that's sort of a fact of life. And that happens, that is the cyclicality of markets. Payments are in a unique space because payments businesses are generally, the markets are massive. For everything that we do in the economy, every real thing that we do, there's usually a money mirror image of that being exchanged backwards, right? And there's a payment attached to that. So the more things we do, the more payments are generally inherently there. So these markets are tending to be very big, which it is a good starting place for a venture investment, because we always know what our downside is. If you're making an investment in an early stage company, your downside is zero. That's what you're going to, it's a very real thing. Startups do fail. Even Series B and Series C startups fail. So then the question is, do I have enough upside? Am I getting, if I make 20 of these investments, what percentage of them will succeed? And will I get the multiple on those ones that succeed that compensate for all of the losers? And so that's something you always have to think about. And payments are a good space because it's potentially large markets. You still have to execute. It's not just because the market's there, you win, obviously. The other thing to think about is, and this is a very strong misconception about investors have, is that there's high risk in early stage and low risk in later stage. And there's this sort of linear thing, which is not really correct. And you're taking different risks at different stages. So if you're investing in a company at a very early stage, say seed stage, which is where we invest a lot, the pricing risk is not so high. The chances of you mispricing this company is not the biggest risk you're taking. The risk you're taking is this founder, is this team going to be able to launch a product in the market and sell it to somebody? There's a lot of things packed up into that quick sentence. They could not launch a product, they could not sell it to somebody. And you see startups that are very good at selling and very good at building product and missing the other piece. But all of those things that you need to do, that's what determines what happens at an early stage. At a late stage, hopefully, if you're investing in a Series C or Series D company, hopefully they do have a real business there. And as an investor, you've got to, do your due diligence to figure that out. But hopefully they have some real economics in that business. But then you're taking a lot of pricing risk. So if multiples come back from, let's say, 12x to 6x, your valuation is divided by 2. So how do you then get further along? So we're seeing there's probably half a dozen startups that are past Series B that are failing in the last few months. In the crypto space, we've seen some real big meltdowns. It's not necessarily because you're taking a later stage company that it's not a risk. It's different risk. So you have to be kind of rational about that. And then as an investor, that's what you're doing. You're pricing risk and you're looking at the opportunity set, and you should be doing that shrewdly.
No, absolutely. And since we are talking about the pricing risk and about valuation, it will be great that if you can share a case study based on one of the startups on how you have been able to define the appropriate valuation for a payment tech startup, just so that we understand the process, if you can.
Yeah. I can tell you, it's as much as art as it is. It's not necessarily a spreadsheet will tell you. Valuation is we all know, it's very market driven, right? So when we talk about multiples, what is a multiple? It's what the market decides to pay for something. So the only difference between a 10x and a 20x multiple is the market feels that they're willing to pay more or pay less for the same object, right? So there was always an element of markets for that. Where we invest at very early stage is we're looking at where can a company get to, and where do companies then trade at, what are companies. So there's always going to be a market element to this. And what we need to do is we need to figure out, one, will this company get to that stage? And then how much money do they need to get to that stage? How much return versus the risk of getting to that stage? And then you always have to take a step back. That's the really tactical element of it. But is this company have a chance to be something big enough, and that my capital is going to create in value to a positive outcome in 5 to 10 years?
And
that's where market size comes into place. So that's where payments can be quite helpful.
That drives me to the question where it will be great to understand what will be the future of payment tech investing in Southeast Asia and beyond. Where do you see emerging trends that you will personally be looking into to invest capital from your end?
Yeah, like I said, there's a lot there. We're very bullish on payments becoming more digital, and that's a very broad thesis, and we can express that in a ton of ways. Just to kind of give you some context, the digital payments grew 26% year on year for the last, I think, 2 or 3 years within APAC, right? That is twice as fast as any other region in the world. That's twice as fast as the Middle East Africa region. That's twice as fast as LATAM. And growth is actually accelerating. So that puts a very big tailwind when we're talking about payments tech. And the question becomes, how do we express that, and what themes are coming up? One is credit card penetration in this region is extremely low. Credit cards are growing in prevalence on the consumer side, yes. On the B2B side, quite a lot as well. So we've made some investments in that space, specifically for corporates and for SMEs. There's a lot of additional tech that allows corporates to be able to spend more responsibly. And these are systems that I think large companies have had for a long time. Your big banks, and they have a sales force. They're able to manage all this stuff. A lot of that software is still quite legacy, and it's trickling down. What we find in tech is that tech either trickles up or trickles down. Trickles down from an enterprise to the SME, or trickles up from things that we use as consumers upwards towards enterprise. So those are kind of the way we like to play it. I think on a broader scale, there's a shift in payments in Southeast Asia. Wallets have come in, and these are running on these real-time payment rails. There's businesses that are able to be built on top of that. This could be automating payments, helping SMEs bill and invoice. Payments are becoming much more embedded into products than they used to be. So, kind of old days, we would buy something and then it would be, okay, now we have to pay for that. That payments would be very much a separate experience. Now payments are much, much closer. When you talk to retailers and when you talk to even large folks that are customer facing, you see that friction is the biggest issue. You want to remove friction in payments. So anything you can do to get closer to the company, to get more embedded, to get more data out of your payments play, that is extremely powerful. And that gives rise to, as you mentioned earlier, the buy now, pay later space. The buy now, pay later space is the fastest growing payment space globally. I would say there's a lot of mixed press about it, but a lot of that is overshadowing the actual sheer numbers. And if you look in the US, more than 50% of the population has used buy now, pay later. In Southeast Asia, it's the fastest growing, it's the fastest growing in nearly every market method of payment. In markets like Southeast Asia, it's growing even faster. So that's going to be a trend that's going to continue on. It's not going away. And that is primarily eating credit cards lunch. The simple fact is that for most users, the credit card value proposition is somewhat flawed, and buy now, pay later improves on that. For a high spending category, credit cards will still be probably because of the cash backs and the promotions they're able to offer. But for most people, for the mass market, actually that value proposition, and there's a lot of studies on this, how the everyday consumer subsidizes the high spender of credit card users. Buy now, pay later is a much more attractive use case, and so we're going to continue to see these kind of things come into market. There's a few other interesting trends, I would say, and just to give you an idea, the ranges of global buy now, pay later CAGRs are between 25 and 45%. So the conservative side is it's growing 25% year on year. The less conservative is nearly 50%. Wow. It's growing massively. It's already a massive market. And as much as probably a lot of legacy players are throwing up their hands and disagreeing that it should be there, consumers are choosing and I guess voting with their feet, as we say. Crypto is actually something that's still new and evolving. There's now more and more companies, especially in places where or in segments of the market which have high merchant discount rates, that are more attractive to crypto. They're getting it from certain segments of the market, places like travel, digital education. Certain segments of the market are a bit more crypto native and are very much pulling into that space. So we have an investment in a company called TripleA, which allows companies to take crypto payments from anywhere in the world. They're regulated by the MAS and FinCEN. They solve the problems for merchants who don't really want to accept crypto. They don't want to be taking a punt on Bitcoin, and they want to be able to take payment in any way. And that's really the trend, is reducing that friction for people to pay. They want to give you value and taking out all those pain points. We're also seeing central bank digital currencies are definitely a hot topic right now. I think there's 2 markets in the region that are already launching pilots in this space. China has launched a pilot, and we're seeing more and more data come out after that. I think beyond those 2, there's probably 4 or 5 that are already either publishing papers or putting out for discussion plans to do a central bank digital currency. So that's gonna be, I think we can think about that probably closer to the kind of real-time payments of setting a real strong base infrastructure that people are going to be able to build a lot of value-added services on top of. Cross-border in this region still continues to be a very, I'd say, painful process. So any tools that can give people, I guess, either cheaper or faster in the cross-border space is going to continue. We have investments in this space, actually not on the actual transferring of money, but in adding infrastructure in to be able to make sure the payments fail less, less bounce backs, less time of money in transit, and that's going to be a continued theme, especially as even though we say the world is sort of deglobalizing right now, or it seems so. In this region, because of the dynamics of these markets, it's still very much a point that's front and center and hasn't been solved yet. I can keep going on and on and on.
No, I mean, what was coming in my what I was thinking about when you were talking about all of this because there was this one investor that I was having a conversation about investing into fintech, and then there was this conversation where he was implying that payment tech is a subsector of fintech. So fintech is something that is already a subsector of tech investing. So there might not be too many things to actually talk about, but I was telling him that he's truly wrong, that inside payment tech itself, there is so much. And as a matter of fact, while you're going through this, I was just thinking about it, that we can have separate conversations about each of them that you mentioned about, and that's exactly how broad it is, how vast it is when it comes to investing into payment tech in itself, which is interesting. So yeah, I mean, there are quite a few things that we can definitely hit on in here, but unfortunately we are out of time. So there's just one part that I want us to conclude with, which is basically, if investors who are listening into this podcast, they want to work with you, they want to know exactly how Southeast Asia fintech market works, how would they be able to do that?
Just reach out. I think you've got an amazing community here, and I think payments is a very, as much as it's sort of a niche within a niche, it is quite broad, and we're always interested to make new connections and understand how payments is something that we all interact with on a day-to-day basis, whether we know it or we not, or if we know how the sausage is made, as they say. Yeah, just reach out. You can catch me on LinkedIn. You can reach out directly to us at 1982. My email address is Scott, SCOTT @1982.vc. Yeah, we love speaking to people in the community.
Awesome. All right. Well, that's it for now, Scott. It was great to host you here. And for all listeners, you can reach out to Scott and his partner Hurston through LinkedIn, as well as through other channels, as well as also they are part of the Paytech Investor Community in Quidroom as well. The community already has around 338 investors on board, and that is growing, and we will have more and more of the sessions. So we will be able to unravel exactly what is happening in the payment tech industry, what investors can look into. But this was a great start, Scott, and thanks for taking the time to go through this. Let's make investments better, one step at a time. For today, we say goodbye.
All right. Thank you. Cheers.
Cheers.